Ever since crypto started going mainstream, everyone has been asking which project will be the first to onboard 1 billion users. Well, the answer could be Toncoin, and it could happen very soon. Today, we're going to give you an overview of what Toncoin is, as well as what they have been up to. We're also going to take a look at just how high Ton could go in the coming months. You do not want to miss this. I hate to be a bore, but I need to give you a couple disclaimers before I give you the lore. You see, financial advice is something I abhor. Entertainment and education lie at our core, so contact a financial advisor if you want to know the score. You should also know that some members of the team hold Ton as part of their personal portfolios, but we'll do our best to be as impartial as we go. And if you sense a bias, well, don't hesitate to let me know in the comments down below. That said, if you're unfamiliar with Toncoin, here's what you need to know. Toncoin has its roots in a crypto project called Ton, which was first launched by Telegram back in 2017. Ton stands for Telegram Open Network, and it raised over $1.7 billion in a 2018 ICO. This was the second largest ICO ever, by the way. Not surprisingly, the SEC cracked down on Ton in 2019, just before its mainnet was about to launch. This was not surprising because Facebook had announced its Libra digital currency not long before that. You see, governments around the world were intimidated by the idea of a big tech giant launching its own currency. It's safe to assume that they were just as intimidated by Ton given its connections to Telegram, but we'll come back to that later. Now, in June of 2020, the SEC ordered Telegram to return the money it had raised from the ICO. At this time, Telegram locked all Ton tokens into special smart contracts that could be mined by anyone, and this therefore allowed them to step aside from the project. Ton subsequently rebranded to the Open Network, aka Toncoin, and they then launched its proof-of-stake mainnet in June of 2022 after the Ton mining had finished. As a fun fact, Toncoin's technology was developed by Nikolai Durov, one of the two brothers who founded Telegram, the other, of course, being Pavel Durov. Besides Telegram, Nikolai and Pavel are also the founders of VK, which is of course the most popular social media platform in most Russian-speaking countries. Nikolai and Pavel left VK after they refused to comply with government censorship requests, and Telegram was their solution, so to speak. Now, given that Nikolai and Pavel founded Telegram, this makes them, well, the original founders of Toncoin. The reason they created it was so that Telegram wouldn't have to resort to the same monetization methods as most other social media platforms. For context, most social media platforms collect and sell your data. Now, in theory, Toncoin became independent of Telegram in 2020. In practice, however, this is questionable. For reference, Toncoin was built by a company called the Open Platform, which is based here in Dubai, and its ongoing development is coordinated by the Ton Foundation, which is a Swiss non-profit. Both entities were founded by Andrew Rogozov, who worked at VK for almost 15 years and was its CEO before working for Toncoin's entities. When you recall that Nikolai and Pavel founded VK, it's possible that there's still connections between the brothers and Toncoin, though officially this is not the case. I'll quickly note, though, that Pavel did confirm that he holds an unspecified amount of Ton late last year. In any case, ever since Toncoin's launch, it has been integrating with Telegram. And these integrations were initially slow, with small things like wallet support and human-readable addresses. Recently, however, these integrations have sped up and grown with things like games and payments. The fact that this has been happening on a social media app with over 1 billion monthly active users is basically why Ton has been rallying so much. By the way, if you're enjoying this video so far, be sure to smash that like button to give it a boost. And subscribe to the channel and ping the notification bell as well, so you don't miss the next one. Now, you should know that this is not the first time we've covered Toncoin. We actually first covered it for our Coin Bureau Club members in December last year and predicted the rally that Ton has been on since then. If you want to see that deep dive, consider becoming a member using the link down below. Who knows what we could cover next? Anyways, as I just mentioned, Toncoin has been increasing its integrations with Telegram over the last year. You'll recall that most of these recent integrations have been focused on gaming. In retrospect, this was to be expected given that they partnered with gaming giant Animoca Brands last year. In January this year, Toncoin published a blog post detailing just how deep this partnership would go and what its crypto gaming plans were. Surprisingly, it noted that Notcoin was just a proof of concept experiment. And this is surprising because Notcoin went on to reach a market cap of over $2.5 billion. Not Toncoin, Notcoin. You know, the simple tap-to-earn game that took the crypto world by storm a few months back. It reportedly gained over 30 million users before its token had even launched. And Notcoin appears to have been a de facto precursor to Hamster Kombat, which of course uses the same tap-to-earn mechanism. What's crazy is that Hamster Kombat was so popular in some countries that it was upsetting governments. For example, the Iranian government alleged that the addictive crypto game was interfering in the country's elections. It's crazy stuff, man. Anyhow, in February, Pavel announced that Telegram would exclusively use Toncoin's Ton to pay for ads on the platform. Not only that, but channel owners who enable these ads would also receive a 50% revenue share. It goes without saying that this increases the organic demand for Ton. At the same time, various crypto exchanges announced Toncoin-related incentive programs. Bybit offered a whopping 7% cashback for all purchases made in Ton using Bybit's branded MasterCard. And this highlights the connections that Toncoin has to the offshore crypto industry. But more on that later. Now, here's where things get interesting. In March, asset manager 21 Shares launched a staked Ton ETP on a Swiss exchange. For those unfamiliar, ETPs are analogous to ETFs, and a Toncoin ETP therefore suggests strong institutional interest in Ton. And the $70 million in inflows underscores this possibility. What's even more interesting is that Pavel simultaneously noted that Telegram was open to conducting an IPO, that is, listing the company's stock on exchanges. FYI, Telegram is currently 100% privately owned, with Pavel and his brother apparently holding all its shares. It's possible that investors see Toncoin as a way to invest in Telegram by proxy, was something confirmed by Ton's price action at the time. More importantly, Pavel apparently wants to maintain private ownership of Telegram, if possible. And this further puts Ton in the spotlight as a possible alternative to Telegram shares. As another fun fact, this possibility is part of why Pantera Capital recently invested in Toncoin. To put things into perspective, Pantera's investment into Ton was the largest the VC firm has made to date. We'll leave a link to an interview with one of Pantera's employees in the description for you guys. Oh, and about 2 months after that, Pantera even disclosed that they were raising additional money to invest in Ton through a Ton-exclusive fund. Talk about conviction, eh? And speaking of Pantera, another reason why they are betting big on Toncoin is because of its role in turning Telegram into a global payment system. And this goal was put front and center at Token 2049 in April, where Tether CEO Paolo Arduino took the stage with Pavel and Andrew. As with Telegram, Toncoin has since been deepening its integrations with Tether at an accelerated pace. For example, in May, Tether and the Open Network partnered up to simplify USDT to fiat transactions on Telegram, and this was accompanied by more stringent KYC rules on Telegram's custodial wallet, which of course makes sense. But that does remind me though, it's extremely important to note that the default Toncoin wallet offered by Telegram is custodial, meaning that you do not technically own the assets in it. Thankfully, there's no shortage of self-custodial wallets to choose from, and we'll leave a link to a list down in the description below. Anywho, in June, Telegram launched a new in-app currency called Stars, which can be used to pay for digital services. Obviously, Stars can be swapped for Ton using one of Toncoin's marketplaces. What's not so obvious, though, is the strategy at play here, which we'll come back to later. Now, another thing that Toncoin did in June was make it possible for its mini apps to earn ad fees in Ton, just like channels. What's fascinating is that most of these advertisements will reportedly come from crypto exchanges, which could explain why so many of them have been throwing their weight behind Toncoin. Earlier this month, Toncoin made a slew of significant announcements. The first is that it would be introducing a decentralized Bitcoin bridge. Now, any Toncoin users out there will know that it's currently only possible to bridge between Toncoin and Ethereum. And naturally, the purpose of these bridges is for DeFi. The second announcement was that it had deepened its partnerships with Animoca brands by launching a $20 million incentive program for Toncoin projects. The third announcement was that Toncoin will be launching a store for its mini apps. More on that later as well. Now, all of Toncoin's partnerships, announcements, and updates have had a predictable effect on Ton's price. It's been going up since late February, driven primarily by the hype around Toncoin's games. Ton's supply and demand dynamics have also been looking very good, at least at first glance. According to Ton stats, Ton's supply has been increasing by an average of around 50,000 Ton per day. Notably, this figure factors in the fact that 50% of transaction fees are burned. With roughly 240 days since we last covered Toncoin, this means that Ton's supply has grown by about 12 million. Assuming an average price of about $4, which is conservative, this means that Ton has experienced no more than $50 million of supply increase. And recall how that ETP alone has bought up $70 million worth of Ton since March. That's more than offset any sell pressure. In other words, Ton's supply has barely grown, while demand for Ton has been growing fast. And this can be seen in almost every on-chain metric. The number of wallets has grown by 10x since the start of the year, the number of daily transactions has risen by almost 10x, and the total value locked on Toncoin has surged by almost 40x. The caveat is that there seems to be more to this supply and demand equation than meets the eye. On the supply side, Toncoin announced in May that it had instructed crypto tracking sites to adjust Ton's circulating supply. Basically, they asked them to subtract the 1 billion-ish Ton held by Telegram and the Ton Foundation. This is eye-opening, as it confirms that Telegram-affiliated entities own roughly a fifth of the supply of around 5 billion. What's even more eye-opening, though, is that more than 2/3 of the supply is held by the top 10 Toncoin wallets, according to the Tonwhales website. I will caveat, though, that some of these are likely smart contracts related to things like staking, for example. Regardless, this suggests that most of Ton's supply is held by just a handful of entities. The good news is that most of these entities seem to be affiliated with Telegram, which has every incentive to see Toncoin succeed. The bad news, though, is that it creates lots of centralization, which could become an attack vector. For example, it's not beyond the realm of possibility that Telegram's custodial Toncoin wallet could be hacked, and it's likely that a large chunk of supply is being held by this custodial wallet. To be fair, though, Ton holders could vote to claw back this stolen Ton. I mean, after all, they had voted to freeze 1 billion Ton that had been mined but not claimed back in 2023, and it seems that this was allocated to Telegram and the Ton Foundation. Whatever the case, the demand side of Ton's equation is similarly eye-opening. Recall that Toncoin had gained over 30 million users before its token had even launched. Today, that number stands at closer to 40 million. But you'll recall that the total wallet count on Toncoin is just above 10 million. When you combine this with the fact that there are fewer than 5 million active wallets, it suggests that the usage of Toncoin's games is not translating into on-chain adoption. And this could be explained by the fact that most users are probably using that custodial wallet, which could, of course, skew the wallet count. Even so, this suggests that Ton's strongest demand drivers has been speculation and not organic adoption per se. The speculation alone has been enough to take it vertical due to the relative absence of new supply. Note that this is a phenomenon we've seen with many other cryptos, and it can last for quite some time. But Toncoin's market cap is already creeping up to 20 billion, and its on-chain metrics are starting to roll over. And this suggests that Ton could see a fairly substantial correction in the short term. And this would make sense given that it hasn't experienced the same kind of pullback other altcoins have in recent months. On the contrary, it has been going up only. And that's probably resulted in lots of rotation out of bleeding altcoins into the only green giant on the CMC rankings. With other altcoins starting to recover, we could see a rotation out of Ton back into other altcoins, which could of course trigger that correction Ton needs to hit higher highs. This means that Ton could fall as low as $5 in the short term. In the medium term though, it could rally up to around $15 before its next pullback. In the long term, Toncoin's massive market cap could limit Ton's growth. It's unlikely that it would go higher than $30 in the longer term. For what it's worth though, Pantera predicts a $150 billion market cap for Toncoin, and that would translate to a price of around $70, which is an almost 10x gain from Ton's current price. It's certainly possible if Ton can list on US exchanges, but this seems unlikely for reasons we'll come back to later. Now, whether Ton can pull a 10x in the long term ultimately depends on Toncoin's upcoming milestones. The roadmap can be found on its website, and it contains a long list of technical milestones, including the creation of a Ton browser, that aforementioned Bitcoin bridge, and gasless transactions, which actually just went live. Additional milestones can be found in its other materials and in interviews with and presentations by its key personnel. A blog post from the Open platform earlier this month revealed that Toncoin continues to be hyper-focused on stablecoin adoption, with USDT the tip of the spear. This is consistent with the grants currently being offered by Toncoin. They focus on its mini apps, on DeFi, on GameFi, and of course on developer tooling. And these grants fit hand in glove with Toncoin's strategy for achieving mass adoption, revealed by some of its personnel in interviews and presentations. Step 1. Create addictive games on Telegram that leverage Toncoin to increase its on-chain adoption. That's Notcoin, Hamster, Kombat, and whatever else comes after. This was revealed by Ton Foundation founder and president Stephen Yun in a presentation. Step 2. Use these addictive games to drive DeFi adoption to increase liquidity. A member of the Ton Foundation noted in an interview that the first milestone is to hit $1 billion in TVL, and hence the Open League Incentive Program. Step 3. Use this on-chain activity and liquidity to bootstrap the adoption of real-world utility, like payments for merchants, etc. This was revealed by Pavel in his joint Tether presentation at Token 2049, and it will start with digital products and services. Step 4. Dissolve the Ton Foundation to fully decentralize the project. This was also revealed by a member of the foundation in that interview I just referenced. It's an ambitious goal that Toncoin hopes to meet in about 5 years' time. Step 5. Profit. Probably. By this point, Toncoin would have fully integrated with Telegram, essentially turning the social media platform into the world's largest shadow bank and payment processor. All we're wondering, though, is whether the regulators are going to sit back and let this happen. Which of course brings me onto the challenges we foresee for Toncoin. And the first challenge is of course the big one, and that's, well, regulation. For those unaware, Facebook's reveal of its Libra digital currency in 2019 is literally the reason why governments around the world started cracking down on crypto. Again, this is because governments were intimidated by the prospect of a foreign currency undermining their national currencies. The fact of the matter is that Telegram could theoretically do this with USDT or some other stablecoin. Take a second to consider that Facebook's Libra was originally pegged to the US dollar. As Telegram continues to grow and its integrations with Toncoin increase, it will face growing regulatory pressure around the world to restrict its crypto offerings. In the interim, Telegram could risk being delisted from app stores for violating their policies with its own mini app store or whatever the other reason they want to choose. I'll quickly note that Google and Apple have a history of restricting and even removing crypto apps. And this ties into the second challenge, and that's adoption. From a user's perspective, increased restrictions around Telegram's crypto features will limit Toncoin's on-chain adoption. And it's possible we're already seeing signs of this already. Remember that Notcoin has 40 million users, while Toncoin has only about 10 million wallets. From an investor's perspective, it seems that Ton won't be listing on US exchanges anytime soon. And that's simply because Toncoin appears to still have some ties to Telegram. Moreover, Toncoin seems to be very centralized. From an architectural standpoint, it has fewer than 400 validator nodes. All things considered, though, this isn't that bad compared to other next-gen cryptos. But from a tokenomics standpoint, however, it seems that most of the supply is held by a handful of whales. This is a double-edged sword for the reasons I mentioned earlier. These whales are likely affiliated with Telegram, so they would never dump as it would do damage to both Toncoin and Telegram. However, the presence of these whales is likely seen as a risk to investors and could even be a risk to users. And this relates to the third challenge, and that's technology. Make no mistake, Toncoin uses truly cutting-edge tech, a master chain of validators which secure smart contract-compatible work chains which can dynamically shard to scale Toncoin to over 100,000 transactions per second. But, as with all cutting-edge technologies, there are very real technical risks, particularly when the technology in question is experiencing exponential growth. Fortunately, there have been no major technical issues yet, though its blockchain did slow to 1 transaction per second last year. Unfortunately, though, the risk of these technical issues will only increase as adoption and development continues. Although we have zero doubts about the abilities of the team, the fact of the matter is that, well, humans, they make mistakes. And in this case, the smallest mistake could lead to some very large losses. And this pertains to the fourth challenge, and that's competition. While Toncoin is unique in its integrations with Telegram, it's not the only crypto that could integrate with social media platforms. Seeing how things are looking in the US, it's likely that pro-crypto regulations will be passed in the coming months. And it looks like these pro-crypto regulations will make it possible for crypto projects to integrate with social media platforms. This in the same way that Toncoin is doing with Telegram. Remember Libra? After it fell apart, the team behind it split off to create 2 crypto projects, Aptos and Sui. From our perspective, the only thing stopping Aptos and Sui from integrating with the likes of Facebook and Instagram is regulation, which could change in the US in the not too distant future. Similarly, Solana has been positioning itself for crypto payments, and similar stablecoin-related regulations are coming. What this means is that Toncoin could soon have some very serious competitors with the same selling points. The silver lining, though, is that the first mover advantage matters in most of crypto. And there's no question that Toncoin has left most of every other crypto project in the dust when it comes to actual adoption. When you take a step back, you realize that the crypto market is more than big enough for multiple layer ones to secure market caps in the hundreds of billions. The only question is which ones have the potential to get this big. Ton is one of the answers here, which is why some of us hold it in our portfolios. Let's just hope that the competition between these crypto titans is a fair fight. And that's all for today's video. But now it's time for you guys to do the talking. So tell me, what do you think of Toncoin? And was this a fair review? And what coin should we be reviewing next? Let me know in the comments down below. And while you're down there, be sure to smash that like button. And if you want to stay informed about promising altcoins, then subscribe and ping the notification bell as well. As always, thank you very much for watching, and I'll see you in the next one. This is Nick, signing off.